Housing starts. Housing starts in June rose 17.3%, which was in line with estimates and a nice move higher. Year over year, starts are now down only 4%, which is significantly improved from down 23% in the previous report. The gain was all in single-family starts, which were up 17.2%. Permits, which are a good future indicator of starts, were up 2.1% month over month and down 2.5% year over year. Single-family permits were up 11.8%. Permits are at 1.241 million. Starts are at 1.186 million. Completions are at 1.225 million. That is, of course, for June 2020. Initial jobless claims. Initial jobless claims for last week was released, showing 1.3 million individuals who filed for unemployment benefits for the first time. This was slightly higher than expectations of 1.288 thousand. That can't be correct. That must be million. 1.288 million. There's a typo, sorry. My fault. Continuing claims improved significantly from 18.06 million to 17.338 million. Jobless claims for the week of 7/11 have been 1,566, 1,540, down to 1,482, further down to 1,408, further down to 1,310, and currently 1,300. This is, of course, thousands. Continuing claims are 17.3 million. The 4-week average has been 1,375,000, or 1.375 million. The largest increase was in Pennsylvania, where they saw an increase of 209,000. California saw a gain of 127,000, and Illinois saw a gain of 57,000. Loan Performance Insights. Corel Logic reported their loan performance insights, showing that 6.1% of mortgages were 30-day or more delinquent, up from 3.6% last month. Those seriously delinquent, or 90 days or more, remained at 12%. Homes in foreclosure dropped from 0.4% to 0.3%, but you won't see the longer-term effects until later, as the spike in 30 days or more will likely translate to more seriously delinquent in time. The foreclosure drop is likely due to forbearance, which has been giving people a lifeline and likely kicking the can down the road. Forbearance. Let's take a look. 30 days or more past due have risen from 3.6% to 6.1%. 30 to 59 days past due have risen from 1.7% to 4.2%. 60 to 89 days past due have risen slightly from 0.7% to 0.6% to 0.7%. Modest gain. 90 to 119 days past due has stayed constant at 0.3%. 120 plus days past due has actually dropped slightly from 1% to 0.9%. Those in foreclosure has dropped as well, as I've mentioned before, 0.4% down to 0.3%. Corel Logic, HPI. Corel Logic released their Home Price Index, HPI. It's their HPI appreciation report for May, showing that home prices rose 0.7% from April to May. On a year-over-year basis, home prices were up 4.8%, down from 5.4%. Washington, 5%, San Diego, 4.9%, and Las Vegas, 4.8%, led the gains. CorrelLogic forecasts that home prices will drop 0.1% from May to June, modest, and they expect prices to fall 6.6% in the year going forward. Their forecast dropped significantly from negative 1.3% in the year ahead. This has been James Graff. You can reach me at 732-500-6883. That's 732-500-6883 or 732-500-MUTE. That's 732-500-MUTE, as in mute the audio on this video or mute my incoming phone call if anything I'm saying to you isn't worth your while. And with that, I have to thank you for not muting thus far. I'm sure you moved on. And I also have to thank you for spending your precious time listening to me. And of course, as always, I truly wish you an absolutely wonderful day. Thank you so much. I have to find the off button.